Thanks, Jane. And as Jane mentioned, Nick Curtis was supposed to present today, and Ray, you sort of started the thematic very well in relation to people and people with experience, so thank you. It was a lead-in I was going to use, but thank you. Projects like the one that NTU have got are about people with experience and experience in developing, particularly in rare earths. So NTU has the Browns Range project. It's based up in the Kimberleys, which for people that don't know that aren't from WA, if you've probably been to Broome, head east from Broome or out towards Halls Creek, and just on the Northern Territory border is where the Browns Range project is. It's been around for quite some time. It's had a lot of money spent on it, lots of drilling, established resource base now, and Nick Curtis, who I mentioned as the executive chair, came along in about December of 22, had been out of the rare earth industry and got back in. And the reason he got back into this particular project was A, given his background in rare earths, but B, in relation to dysprosium and terbium. So if you think about rare earths, think about light and heavies. You think about heavies, think about Dy and TB. Now, if you do one thing today, if you can sort of go away and read about heavy rare earths and Dy and TB, you'll get to understand that story. And so this particular deposit is rich in the higher value rare earths, being the Dy and TB, and that's why Nick came back to get on board and get this thing into production. So the previous management team and still current management team spent money on a pilot plant. It's probably, I would think, probably the largest scale pilot plant you've seen in a project in the world, actually. If you ever get to go up there, it's a 10% scale. They ran it for 3 years, and that pilot plant itself went all the way through from mining, beneficiation, through to a concentrate, and then also a hydromet plant all the way through to what's called a mixed rare earth carbonate. Sold the product, offtake, sold, product well received, used in the industry. So I guess the reason I mentioned that is that it was a great lessons learnt in terms of what they've got and what we've got up there and from a project perspective. So in about October of last year, we finalised a deal with Iluka. So many in the room will probably know that Iluka are building a large rare earths refinery at Eneabba in WA. They had about a $1.25 billion loan from EFA, from the Australian government, strong Australian government support. And I guess, again, referencing back to Nick, but if he was here, he'd tell you that lessons learned from Linus, from his days from Linus, is in terms of complexity of, and particularly where we are, the complexity of building a mining operation and then a chemical operation, too hard. Let's reduce project complexity. Let's reduce CapEx, particularly in these times. I'm sitting next to a gentleman today that was responsible for the project management of the pier at Port Hedland back in the 60s, and I asked him what the CapEx was for that pier, and he remembered it'd be $3 million at that stage. So CapEx is king, right? We've got to be mindful of that. So what we decided to do was to stay as a miner, produce a concentrate, go to a company that knows what they're doing in the chemical industry, being Iluka, sell them the concentrate. So we've got a life of mine offtake agreement. Again, for those that know the geography of WA, we'll get to a concentrate, put it on a truck, ship it round down the coast, down to Eneabba. They'll process from there and export from there. In terms of the order of magnitude, CapEx-wise, or an order of magnitude, this stage of about $500 million, excluding sort of the usual costs of finance, etc. We're going through a DFS at the moment, and we're using the usual best in breeds in terms of experts from a processing perspective, geology, non-process infrastructure, etc. The beauty about this particular operation and particular project, I think, is that, again, pilot plant, lots of lessons learned, so ore body knowledge high, processing plant particularly, again, given that we're only going through to a concentrate, crush, ore sort, which I'm sure you're all across in terms of the emergence of the ore sorting technology, very, very useful in this particular ore body, ore sort into a mill and then into a mag sep and then float. And there you go, that's the concentrate, looking to do a 20 to 30% concentrate. So we'll end up shipping around about 5,000 tonnes of TREO per year down to Eneabba. So we've built the management team as well, particularly focusing on the ESG aspects. We all know in terms of licence to operate, so important these days. So we've built that management team but with people we've worked with before. They're first class. And I guess the other thing is, we've come into this project and all the primary approvals in place. And, everybody here knows in terms of getting a project up, having your environmental in place, having your mining lease all approved, all those primary approvals are in place. So the building blocks are there. A capex that, capex is capex, and we have to fund that. And on that funding, we're also going down the path with NAIF and EFA. The analogies there with the Luca are obviously obvious. We've had some good interest out of the commercial banks. So from a debt perspective, we've got a process underway at the moment. Our partnership with the Luca was not only offtake, they're not only taking life of mine, but they're also an investor. They put $20 million into the company last year. They also have the ability under a put and call structure to put another circa $50 to $55 million in at FID. So from an ingredients perspective, we're baking a cake, and we want the cake to sort of, if FID is when we start eating, we're looking at sort of first half of next year, of 2024. So the jobs we've got to get done between now and then, and we've got to finish the DFS. We also applied for, and we're one of the highest recipients of the Critical Minerals Development Grant. So we received a grant of about $6 million for that. So what we'll do with that is we'll have a drill program in later this year to look to do some resource definition, basically narrow spacing on the existing resource, and do that at the back end of this year. So people, project, funding, we're going through the process. And I guess the thing is that from a DY and TB perspective, again, when you do your research on DY and TB, you'll see that China are they're the predominant, they're sort of 90-95% of these particular products. They dominate the market. Stephen, I think you spoke about the provenance, so now getting back to traceability. So China get 40 to 50% of their production out of Myanmar. Now, that's likely to be problematic going forward, environmental and human rights issues. And so once we start to see provenance on a lot of these technologies, you may start to see issues coming out of China, and we can think about that, where the demand supply comes from. And again, it's probably a lot of assumed knowledge here, but DY and TB into permanent magnets. Permanent magnets take that energy that's stored in batteries that everybody talking about lithium, that takes that energy and converts it into kinetic energy. So you've got a permanent electric motor powered by a permanent magnet, year 12 science. And what the DY and TB does, it allows those magnets to operate at a higher temperature. So if you want your electric vehicles, your wind turbines, your defence applications that require these electric motors with the magnets in them to operate at a higher temperature, you need DY and TB. China is producing all of it. Not many other projects around the world in scale at that grade. So I think that's where the opportunity is. So thanks very much, and thanks again, Jane.